All right, welcome. Today, we're going to build something special, a trader's masterclass. Now, this isn't just about buy low, sell high. We are going way beyond that. We're going to put together a complete framework, a real, durable system for mastering the financial markets with skill and, most importantly, discipline. So, how are we going to do that? Well, we've broken it down into 5 key phases. We'll start with how to even look at the market, then we'll dive deep into probability, manage our risk, and then we get to the final boss, your own mind. And this right here, this is the whole game. You have to get this from the jump. Pushing the buy and sell buttons, that's the easy part. The real war, the real challenge, is happening right between your ears. This single idea is the lens for absolutely everything we're about to cover. Okay, let's get into it. Phase 1. Look, before you even think about clicking buy, you need a system. You need a way to see the market. Think of it like putting on a special pair of glasses, a lens that helps you spot those moments where the odds, even just a little bit, are tilted in your favor. And generally, you've got 2 main pairs of glasses to choose from, fundamental and technical. With fundamental analysis, you're basically a financial detective. You're digging through company reports, looking at the whole economy, trying to figure out what a company is really worth. The whole goal is to find a dollar bill that's selling for 50 cents. Technical analysis, on the other hand, that's more like being a crowd psychologist. You're not looking at the company itself, you're looking at the chart, at the price, trying to read the emotions, the fear and greed of the market. But here's the absolute key, and you cannot miss this. Neither of these is a crystal ball. They don't predict the future, period. All they do, their only job, is to help you spot a setup that has a positive statistical edge over time. We're here to play the odds, not to be fortune tellers. Okay, so if our tools are all about probability and not prediction, what does that actually mean for us? It means we have to make a huge mental shift. This is maybe the thing that separates the pros from the rookies. You have to truly, deeply, radically accept that the future is uncertain. You don't know what's going to happen next. You control nothing. You see, the amateur trader is always looking for that sure thing, right? That guarantee. It's a fool's errand. A professional trader, they see the future completely differently. They see it as a range of possibilities, a probability distribution. They know that the 90% chance thing might not happen, and that 1% long shot absolutely could. It's not about being certain. It's about managing what's probable. And this is a tough pill to swallow, but it's essential. You can do everything right. I mean, textbook perfect. You find your setup, you execute flawlessly, and you can still lose money. Why? Randomness. That's why you have to disconnect the outcome from the quality of the decision. A great decision can lead to a bad result. Your job isn't to be right. Your job is to make good decisions over and over again. So if everything is so uncertain, how in the world do we make any money? What's the secret? It's actually pretty simple. Math. See, trading isn't a lottery ticket. It's not about that one epic win. It is a numbers game played over hundreds, even thousands of trades, where that tiny little statistical edge you have is all you'll ever need. And this brings us to the magic formula, positive expectancy. The best way to think about it is a casino, right? The house has no idea if the next spin on the roulette wheel is going to be red or black. They don't care. They just know that over thousands of spins, their tiny little edge on those green zeros will make them rich. You need to be the casino. If you have a strategy where your average win is bigger than your average loss over time, you literally can't lose, as long as you keep placing bets. Your only job is to show up and execute. But, and this is a big but, there's no free lunch here. Every edge comes with a trade-off. You can't have it all. It's like this iron triangle. You want to win almost every single time, like a scalper does? Totally fine. But you have to accept that your wins are going to be tiny. Or, do you want to hit those massive home runs, the kinds of trades trend followers dream about? Awesome. But you better get comfortable with being wrong. A lot. You have to pick your poison. You choose the math that your personality can live with. Okay, so we've got our heads straight about uncertainty. We get the math. Now it's time to build the single most important piece of the entire puzzle. And it's not your offense, it's your defense. Risk management isn't sexy, but it is everything. It's your armor. It's what keeps you alive to trade another day. It's what stops one stupid mistake from wiping out a month of hard work. And maybe most importantly, it protects your mind. It stops you from going on tilt after a big, painful loss. And if there is one number I want you to burn into your brain, it's this: 1 to 2%. That's it. That is the absolute maximum amount of your entire account that you should ever risk on one single trade. This isn't a suggestion, it is the law of survival. If you do this, no single trade can ever blow you up. It's the bedrock of your entire career. All right, we're at the final phase, and honestly, this is the boss fight. We've got the analysis, we've got the risk plan, now we have to deal with the one variable that can screw it all up. Us, our own brain. Look, we're human. We are biologically wired to follow the herd. It's a survival instinct. But in the market, it's a recipe for absolute disaster. That little voice in your head screaming, "Everyone's buying, get in!" That's what causes people to pile in at the very top, and that panic that makes you sell everything at the bottom, same thing. Your job as a trader is to be a contrarian to your own instincts. So how do you fight your own biology? You build a system. You become a machine. It's a simple 5-step loop. 1. You wait for your A+ setup. 2. You execute the trade. No fear, no greed, you just click. 3. You accept whatever result the market gives you. 4. You let go of the emotion, detach completely. And 5. You go right back to waiting patiently for the next setup. That's it. You fall in love with the process, not the outcome. And that's what it all comes down to, really. This one last critical question you have to ask yourself. Are you focused on the money, or are you focused on the process? Because the great secret is that the traders who last, the ones who truly master this game, they aren't chasing profits. They are absolutely obsessed with perfecting their process. Do that. Just focus on executing perfectly every single day, and you'll find the money just shows up. It becomes a byproduct of your discipline.